Hello Kanna, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. This revision lecture that you are watching is the most important revision lecture from the point of view of your examinations. May it be May 25 exams, September 25 exams, or even January 2026 examinations. This revision lecture is at least going to carry 8 to 10 marks in the examination, because here we are going to revise the tax rates applicable in income tax. Let it be the normal tax rates as per section 115 BAC, or even the special tax rates. And it is even more important because number 1, without tax rates you cannot calculate the tax, and number 2, it is also having amendments this year which are very important from the exam point of view. Hence, I want you to watch this revision lecture at least 2 to 3 times before your examinations, and the entire content of this revision lecture you should by heart. It should be at your fingertips before entering the exam hall. Okay? And before starting the revision lecture, my humble request as usual is that with great difficulty and after facing a lot of challenges, I have come back on YouTube to record and upload lectures for all of you as a motivation to keep me going to upload more revision lectures like this. I want you to like this video, comment if you are able to understand or not, and even subscribe to the channel and share this video with your friends. Now, without further ado, let us begin the revision. So in this video, we are going to revise the tax rates. Firstly, I want you to know about the tax rates. What are the different types of tax rates in the Income Tax Act, Kanna? Firstly, tax rates are of two types: normal tax rates and special tax rates. Normal tax rates are the tax rates which is applicable for all the types of incomes generally. However, special tax rates are the tax rates which are applicable only for some special types of incomes, and the tax rates are given in that section itself. They are given in different sections, not together. Okay. In normal tax rates, there are two types of regimes, Kanna: new tax regime and old tax regime. What did I tell? New tax regime and old tax regime. The new tax regime is given under section 115 BAC of the Income Tax Act, and now this new tax regime has become the default tax regime. New tax regime has become default tax regime. It means what? If the assessee is not choosing any tax regime, automatically the default tax or new tax regime will apply. However, there is also an old tax regime. Old tax regime, which are nothing but the normal provisions of the Income Tax Act, and the tax rates of the old tax regime are given in the Finance Act. Okay, so if the assessee wants to opt for the old tax regime, then he has to shift out of the new tax regime and opt for old tax regime. Okay, this we are going to learn in detail in this lecture itself, so don't worry. Now, for what year we are going to learn the tax rates? The year that we are going to learn the tax rate is for previous year 24-25. That is the year beginning from 1/4/2024 till 31/3/2025. So if the income is earned in between this year, then these tax rates would apply. Since the previous year is 24-25, the assessment year is what? Assessment year 25-26. Okay, so the tax rates of assessment year 25-26, firstly we are going to learn the normal tax rates, which is the old provision. Okay, which is the old provision or the optional tax rates. Fine. So firstly, let us learn the tax rates for an individual. For an individual, up to 2,50,000 rupees, no tax. Up to 2,50,000, no tax. Hence, this 2,50,000 is also called basic exemption limit, or it is also called maximum amount not chargeable to tax. So it is the maximum amount up to which there is no tax. So 2,50,000 is called basic exemption limit or maximum amount not chargeable to tax. So up to 2,50,000 no tax, above 2,50,000 up to 5 lakh rupees 5% tax, above 5 lakhs up to 10 lakhs 20% tax. See, be very careful. There is no 10% slab rate. Okay, after 5 there is directly 20. Then up to 10 lakh above 10 lakh rupees 30% tax. So listen to me once again. up to 2,50,000 no tax, above 2,50,000 up to 5 lakhs 5%, above 5 lakhs up to 10 lakhs 20%, above 10 lakhs 30% tax. Okay. Now there is a benefit given to resident senior citizen and resident super senior citizen. Sir, who are this senior and super senior citizen? Answer is, if any individual has completed 60 years of age during the previous year and is a senior citizen, and if any individual has completed at least 80 years of age during the previous year, he will be considered a super senior citizen. So either the age will be given in the question itself, or if date of birth is given, you make sure that if the person is born on or before 1965, the person will be considered a senior citizen, and if a person is born on or before 1945, then he will be considered as super senior citizen. Sir, why are we taking 1/4/1965? Because if a person is born on or before 1/4/1965, then he would have completed 80 years of age by 31st of March 2020. 60 years of age by 31st of March 2025. Okay. This detailed explanation we have already learnt in class, so I am not going in depth, but you can make a note. Now, for a resident senior citizen, up to 3 lakh rupees there is no tax, and for a resident super senior citizen up to 5 lakh rupees there is no tax. So this is the benefit given. However, the senior citizen and super senior citizen should be resident. Sir, what if he is a non-resident? If for a non-resident there is no such benefit karna. For them the normal tax rates will apply as usual. Okay. So now let us learn once again, because this is very important. Individual total income is only tested in your examination in general. Okay. So for an individual up to 2,50,000 or 3 lakhs or 5 lakhs, as the case may be, there is no tax. Above 2,50,000, 3 lakhs or 5 lakhs, up to 5 lakhs 5% tax. Above 5 lakhs up to 10 lakhs 20% tax. Above 10 lakhs 30% tax. Fine. Now for Hindu Undivided Family, that is HUF, Association of Person, that is AOP, Body of Individual, that is BOI, and Artificial Juridical Person, that is AJP. For all these 4 categories of persons also, the tax rate is the same as that of individual. What is that? Up to 2,50,000 no tax. Above 2,50,000 up to 5 lakhs 5%. Above 5 lakhs up to 10 lakhs 20%. Above 10 lakhs 30% tax. Okay. Now let's come to partnership firm, limited liability partnership, that is LLP, and local authority. So for all these 3 types of assessees, on the entire income 30% tax. So tax is a flat rate. There is no slab rate system in case of firm, LLP, and local authority. Okay. Now let us come to cooperative society. Sir, cooperative society is not a different type of person. It comes under the category of AOP or BOI only. However, for a cooperative society, there are separate tax rates given under Income Tax Act. Hence, we have to learn it separately. Okay. For cooperative society, up to 10,000, 10% tax. Above 10,000 up to 20,000, 20% tax. Above 20,000, 30% tax. So up to 10,000, 10%. Above 10,000 up to 20,000, 20%. Above 20,000, 30% tax. Okay. Now let's come to company. Company are of 2 types, Kanna. Domestic company and foreign company. Domestic company and foreign company from the tax rate point of view. So for a domestic company, the tax rate is 30%. How much? 30%. However, if during the previous year 22-23, you are learning the tax rate for what year? Previous year 24-25. Okay. So for previous year 22-23, if the turnover is up to 400 crores, then the tax rate will be a reduced rate of 25%. So you are going to learn going to see the turnover of the year before the year, that is previous year 22-23. Generally, this is only the case. You are going to see 2 years before turnover. If it is up to 400 crores, the tax rate will be 25%. Sir, what if the company itself was not there in previous year 22-23? It is a newly incorporated company. incorporated only after previous year 22-23. In that case, what will be the tax rate? In such case also, the tax rate is going to be 25% because the CA Institute assumes that during the previous year 22-23 there was no turnover. Hence, the turnover is automatically within 400 crores. So you can take the benefit of 25% tax. Okay. Now let's come to foreign company. In foreign company, till last year the tax rate was 40%, but now it has been removed. The new tax rate is 35%. So for foreign company, the tax rate is 35%. Okay. So these are all the tax rates for different type of persons. Now let us come to surcharge. Sir, what is surcharge? Surcharge is the tax on the tax. Okay. So it is a percentage of income tax. So for example, if the income is 1 lakh or let's say 1 crore, okay, and let's say the tax is coming as 30 lakhs, we are just assuming, then the surcharge, if it is 15%, it is not calculated on 1 crore, it is calculated on 30 lakhs. Okay, so it is a percentage of income tax. Hence, you have to be very careful. If you want, you can draw the danger symbol. So, what is the surcharge rate, Kanna? For individual, HUF, AOP, BOI, and AJP. For whom and all? Individual, HUF, AOP, BOI, and AJP. For all these 5 types of persons, the surcharge rate is the same. What is the surcharge rate? If the total income is above 50 lakhs but up to 1 crore, then 10% surcharge. Total income above 1 crore up to 2 crores, 15% surcharge. Total income above 2 crores up to 5 crores, 25% surcharge. And total income above 5 crores, 37% surcharge. So above 50 lakhs up to 1 crore, 10%. Above 1 crore up to 2 crores, 15%. Above 2 crore up to 5 crores, 25%. And above 5 crores, 37% surcharge. And remember, in surcharge there is no slab rate system, so you cannot calculate surcharge differently, that up to 1 crore I will calculate 10%, above 1 crore I will calculate 15%, different slab. That concept is not applicable for surcharge. That concept is applicable only for the income tax rates. Okay. Next, let's come to firm, limited liability partnership, and local authority. For firm, LLP, and local authority, for total income above 1 crore, the surcharge rate is 12% on income tax. Okay. Now let's come to domestic company and cooperative society. So for domestic company and cooperative society, if total income is above 1 crore but up to 10 crores, 7% surcharge. And for total income above 10 crores, 12% surcharge. So from 1 crore to 10 crores, 7%, above 10 crores, 12% surcharge on income tax. Then foreign company. For a foreign company, Kanna, if the total income is above 1 crore up to 10 crores, 2% surcharge, and total income above 10 crores, 5% surcharge. So surcharge is generally less for a foreign company. Why is it so less? Because the tax rate is already high. Okay, hence the surcharge is less. Now let's come to 87A rebate. But before that, I want to say that there is a limit of 15% on certain types of incomes for surcharge that we are going to learn at the end of the video. Okay. So now let us learn about section 87A rebate. Section 87A rebate. Sir, what is this rebate? This rebate is nothing but a discount given by the government on income tax. Okay, a discount that is given by the government. So what is the rebate? Rebate is allowed up to 12,500 for resident individual having a total income of up to 5 lakhs, including both normal and special income. Okay. So what is rebate? For a resident individual. So if a person is not a resident individual, no rebate is applicable. Rebate is allowed only for whom? Resident individual whose total income should be up to 5 lakhs. Okay. Sir, what if the total income is more than 5 lakhs? In such case, no rebate is applicable. Fine. Let us see an example. So, if Mr. A is a resident individual, his income on interest on fixed deposit is 5 lakh rupees, then what is the rebate? See, total income is 5 lakhs, then you have to calculate the tax. Up to 2,50,000, no tax. Above 2,50,000 up to 5 lakh, 5% tax, which is 12,500. So total tax is how much? 12,500. What is the rebate? the maximum rebate allowed is up to 12,500. So what will be the rebate? Actual tax or 12,500, whichever is lower. Actual tax or 12,500, whichever is lower. So in this case, actual tax is how much? 12,500. Maximum rebate is how much? 12,500. Whichever is lower is how much? 12,500. So 12,500 is allowed as rebate. So final tax payable is 0. Final tax payable is 0. Sir, since maximum income itself is 5 lakhs up to which rebate allowed, and you told that the tax for 5 lakhs is 12,500, can't we say that entire tax will be allowed as discount for 5 lakhs? Answer is no, Kanna. See, what if the 5 lakh income is a capital gain income which is coming under special tax rates? In such case, the tax will be high. The maximum amount of rebate will be 12,500 only. Balance amount of tax has to be paid by the assessee. Fine. So in short, can you say that entire tax is allowed as rebate? Answer is no. Only maximum 12,500 is allowed as rebate. You get my point? Next, concept of marginal relief is not allowed for optional tax regime in rebate. Sir, what is this marginal relief? In marginal relief, in surcharge also we are going to study. Okay, first let us study the concept of marginal relief in surcharge, and then I am also going to teach you this concept for rebate. Okay, sir, what is marginal relief? See, Kanna, when the income is generally more than the surcharge limit and only slightly more than the surcharge limit, then many times what happens, the extra tax because of that extra surcharge is sometimes more than the extra income itself. The extra tax is more than the extra income itself. So in such case, generally the people will be earning only 1 lakh extra, but they will be paying tax of 2,50,000 extra. This is not fair. Hence, the government gives marginal relief. Sorry, the Income Tax Act gives the marginal relief. What is the marginal relief? The extra tax cannot be more than the extra income. The concept of marginal relief is that the extra tax cannot be more than the extra income. Okay, so how to calculate the marginal relief? Very, very simple. Marginal relief is actual tax minus tax on limit minus total income above limit. Actual tax minus tax on limit minus total income above the limit. Like this, in theory you will not be able to understand clearly, so I have also given you an example in this video. Let's say the total income of Mr. A is 1 crore 1 lakh. Okay, so calculate the tax payable and marginal relief. Now we are studying the old tax regime. So in old tax regime, tax payable is how much? Total income is how much? 1 crore 1 lakh. So up to 2,50,000 no tax. Above 2,50,000 up to 5 lakhs, 5%, that is 12,500. Above 5 lakh up to 10 lakhs, 1 lakh rupees is the tax. And above 10 lakhs up to 1 crore 1 lakh, 30%. So 27 lakh 30,000 will be the tax. So total tax is how much? 28 lakh 42,500. Now see here. Since the income is 1 crore 1 lakh, which is what? More than 1 crore. Hence, what is the surcharge that we learned? Surcharge is 15%. Hence, you have to calculate 15% surcharge, which comes to 4,26,375. Hence, the final tax is coming as 32,68,875. 32,68,875. Now, let us see what will be the tax if the income was 1 crore. What will be the tax if the income was 1 crore, which is the limit of surcharge? Okay, up to 2,50,000 no tax. Above 2,50,000 up to 5 lakhs. Like this, if you calculate the slab rate, the total tax will come to 28,12,500. Fine. Now listen, Kanna. Above 1 crore only, the surcharge will be 15%. Up to 1 crore, the surcharge is how much? Only 10%. Hence, we have to calculate 10% surcharge, which comes to 2,81,250. Hence, the final tax is coming to how much? 30,93,750. Final tax is how much? 30,93,750. So, listen here, listen very, very carefully. The person earned only 1 lakh more than 1 crore. The person earned only 1 lakh more than 1 crore, but see the difference in tax. He is paying the tax of more than 1 lakh extra. paying the tax of more than 1 lakh extra. Hence, marginal relief concept says the tax must be restricted to the additional income. Hence, how to calculate the surcharge? See here. First, you will write total income above the limit, which is 1 crore 1 lakh minus 1 crores. It is coming to 1 lakh rupees. Now, how to calculate the marginal relief? Marginal relief is A minus B minus C, which is what? Tax on total income minus tax on surcharge limit minus total income above limit. You are getting marginal relief of how much? 75,125. So, this 75,125 must be reduced from this actual tax. Hence, new tax after the marginal relief is how much? A minus D, you will get as 31,93,750. Fine. So, tax payable after rounding off is also how much? 31,93,750. Okay. Do you get the point of marginal relief? And listen very, very carefully. Whether it be rebate or whether it be marginal relief, it is always calculated before health and education cess. Health and education cess is only the final step after rebate or marginal relief. That you have to understand. So in this example, if you see, tax on 1 crore is how much? 30,93,750. Extra income is how much? 1 lakh rupees. So if you put the total, you will get the tax as 31,93,750. This is also one more shortcut to calculate the final tax. Tax on 1 crore plus the extra income, that is 1 lakh. So whenever you see a question where the total income is slightly higher than the surcharge limit, then you have to calculate the marginal relief. Okay. If you want, you can just pause the video now and see this calculation once again, so you are able to understand it and absorb it, and then let us move to the next concept. Okay. Now let me tell you about the concept of marginal relief in 87A rebate. Listen very carefully. Under the old regime, no marginal relief is allowed for the 87A rebate. But for the new tax regime, marginal relief is allowed for the 87A rebate. First, let us see what will happen in case of old tax regime. See, we learnt that if the income is up to 5 lakhs, then the tax is going to come as 0. But what if the income is 5 lakh and 5 rupees? 5 lakh and 5 rupees. Firstly, let me tell you about rounding off. Section 288A tells that if the total income should be rounded off to the nearest multiple of 10. Okay. So let's say if the total income is 1 lakh and 4, then this will be rounded off to 1 lakh, which is normal rounding. If the income is 1 lakh or 5, it will be rounded off to 1 lakh and 10. Upper rounding. So 5 and above you have to do upper rounding, below 5 you have to do lower rounding. You get my point? Okay. Similarly, section 288B tells that even the tax payable or refundable, that is the final tax payable or refundable, should also be rounded off to the nearest multiple of 10. 288A and 288B. Now listen here. If the income is 5 lakh and 5 rupees, the total income after rounding off will become how much? 5 lakh and 10. Now, since the rounded off total income is more than 5 lakhs, then you have to calculate the income and no rebate will be applicable. Since the income is more than 5 lakhs, no rebate will be applicable. Okay. So what is the tax? The tax you are getting is 12,502, and after rounding off it will become 12,500. So this entire 12,500 has to be paid by the assessee in the old tax regime. You get my point? So even if extra income is 5 rupees, the extra tax is how much? 12,500 rupees. There is no concept of marginal relief. Okay. So I hope you have understood the 87A rebate, marginal relief for surcharge, and also the surcharge provisions. Now let us talk about health and education cess. Health and education cess is always the last step in calculating the tax. What is the health and education cess? 4% of income tax plus surcharge. So you have to add the income tax and surcharge, and on the total you have to add 4% health and education cess. You get my point? So this is the normal tax rates, and you have also understood the concept of marginal relief. Fine. Now let us jump to section 115 BAC, that is the new tax regime, which is what? The new tax regime or default tax regime. Here you can write new tax regime. Okay. So firstly, let us learn what are the tax rates in the new tax regime. Then we will learn the conditions in the new tax regime, and then we will learn about the option to select the new tax regime. So firstly, what are the tax rates? And listen here, it is very important, because here there is an amendment which is definitely going to be tested in your examinations. Okay. So new tax regime is applicable to whom? It is applicable to both resident and non-resident. So for 115 BAC, you should not see whether the individual is resident or non-resident. Now it will be very clear karna, but all these doubts you will be having only when you are entering the exam hall. So remember, for a individual, you need not see whether the individual is resident or non-resident. For everyone, this 115 BAC will apply. Okay. So individual, this applies to individuals, HUF, AOP, other than cooperative society, BOI and artificial juridical person. Individual, HUF, AOP, BOI and artificial juridical person other than cooperative society. Now, on what is it applicable? It is also applicable on the normal income. So special tax rates will always be applicable whether it is old tax regime or new tax regime. That is entirely separate, as I told you. Only the other than special tax rates, you have to choose whether you want to opt for old tax or new tax. Okay. Now what are the tax rates as per the default tax regime? Up to 3 lakh rupees, no tax. Above 3 lakhs up to 7 lakhs, 5%. Above 7 lakhs up to 10 lakhs, 10%. Above 10 lakhs up to 12 lakhs, 15%. Above 12 lakhs up to 15 lakhs, 20%. Above 15 lakhs, 30% tax. So what is the tax? 5, 10, 15, 20 and 30. So be very careful. There is no 25% slab. There is no 25% slab. So listen to me one more time. Up to 3 lakhs, no tax. Above 3 lakhs up to 7 lakhs, 5%. Above 7 lakhs up to 10 lakhs, 10%. Above 10 lakhs up to 12 lakhs, 15%. Above 12 lakhs up to 15 lakhs, 20%. Above 15 lakhs, 30% tax. Sir, here do the senior or super senior citizen get some extra tax benefit? Answer is no karna. No special benefit in the default regime for senior and super senior citizen. For everyone, the tax rate is going to be same. And here the basic exemption limit is how much? 3 lakh rupees. In the old tax regime, it was how much? 2,50,000. In new tax regime, it is how much? 3 lakh rupees. Now let's come to surcharge. Surcharge is also same concept karna. For individual, HUF, AOP, BOI and artificial juridical person other than cooperative society, if the total income is above 50 lakhs up to 1 crore, 10%, above 1 crore up to 2 crores, 15%, and above 2 crores, 25% surcharge. In the default tax regime, there is no 37% surcharge. Be very careful. In default tax regime, there is no concept of 37% surcharge. Okay. So maximum surcharge is how much karna? 25%. Now let's come to rebate. Section 87A rebate is allowed if the total income is up to 7 lakh rupees and the maximum rebate is how much? 25,000. This rebate is also allowed only for resident individual. So for resident individual having a total income of up to rupees 7 lakhs, the rebate is how much? Maximum 25,000 rupees. Okay. Now listen here. In case of new tax regime, the rebate concept has marginal relief. Rebate concept has marginal relief. How to calculate the marginal relief? Very simple. Marginal relief is actual tax minus total income above the limit. Actual tax minus total income above the limit. Sir, in marginal relief concept, what if while calculating the answer we are getting a negative answer? If you are getting a negative answer in marginal relief, it means there is no marginal relief. Okay. Now see this example. In case of 7 lakhs, what will be the tax? And in case of 7,20,000, what will be the tax? So if the income is 7 lakhs, the tax will come after calculating the slab rates as 20,000. Maximum rebate is how much? 25,000. Hence the entire tax is allowed as rebate. Final tax payable is 0. Now let's come to income of 7,20,000. If the income is 7,20,000, then the tax is coming as 22,000. 22,000. Now how to calculate the rebate? The rebate is actual tax minus total income above the limit, which is actual tax is how much? 22,000. What is the total income above limit? It is 20,000. Hence the marginal relief will be 2,000. So the final tax payable will be 20,000 only. Okay. So since here what is the shortcut? How much the person earned more than 7 lakhs? Answer is 20,000. So what will be the final tax? That is 20,000 in case of marginal relief concept. So that is one shortcut, but I want you to go by this method only while doing the calculation in your examination, so that the all steps are completely visible. Okay, if you want, you can pause the video once and see how the calculation is done. Next, in new tax regime also there is rounding off concept, section 288A and section 288B. In new tax regime, alternate minimum tax is not allowed. Okay, now let us jump to the conditions. See here, Kanna. In the new tax regime, what did we see? We saw that the tax rates are little bit lower. 5%, 10%, 15, 20 and 30. And moreover, above 15 lakhs only there is 30% tax. So definitely the assessee would want to choose the new tax regime, correct, 115 BAC. But it is not so simple, Kanna. Why is the new tax regime brought? Because the Income Tax Act wants to delete or remove certain exemptions and deductions. Hence, the Income Tax Act is telling that we will not give you the benefit of certain exemptions or deductions if you are choosing section 115 BAC, that is the new tax regime. Now, what are the exemptions and deductions that will not be allowed? Let us see. Okay. Number 1, this is a good thing only, that alternate minimum tax is not applicable in case of 115 BAC. However, if there is an old AMT credit, that is alternate minimum tax credit, that is being carried forward, then that will lapse if the assessee is choosing section 115 BAC. So, if the assessee wants to opt for new tax regime, and if there is a lot of AMT credit that is available, then the better option is to first choose the old tax regime, use up this entire AMT credit and then switch to new tax regime. Okay. Now, what are the other deductions and exemptions that are not allowed? Let us see. Firstly, let us come to salary. In salary, there is no benefit of leave travel concession under section 10 clause 5. Then house rent allowance exemption is also not allowed. House rent allowance HRA is also not allowed. Then all those allowances, multiple allowances that we studied under section 10 clause 14 is not allowed under section 115 BAC. However, 4 allowances are still allowed as exemption. 4 allowances are allowed. So what are they? Transport allowance, which we learned for handicapped people, correct? Transport allowance, conveyance allowance, travel allowance and daily allowance. Transport allowance, conveyance allowance, travel allowance and daily allowance are allowed as exemption, but all the other allowances which were earlier exempt under old tax regime will not be exempt under new tax regime. It will be fully taxable. Okay. Then section 16 deduction also, in case of entertainment allowance it is not allowed, and professional tax deduction also not allowed. Entertainment allowance not allowed as deduction, professional tax not allowed as deduction. Sir, what about standard deduction? Standard deduction, Kanna, let me tell you one unique thing which is applicable only from May 25 exam onwards. What is that unique point? The unique point is that now section 115 BAC, in 3 cases it is giving more deduction than the old tax regime. The government wants to make this more lucrative. Hence, what is it giving? It is giving more tax regime than the old tax regime. Hence, in standard deduction, in old tax regime, the standard deduction is how much? 50,000. But in new tax regime, the standard deduction is 75,000. Old tax regime 50,000, new tax regime 75,000. Okay. Other two examples also I am going to tell you very soon. Now let's come to house property. In house property, interest on loan in respect of self-occupied property. In respect of self-occupied property, interest on housing loan is not allowed as deduction. Sir, what about let out property and deemed to be let out property? Yes, their interest paid is allowed as deduction. However, listen very carefully. In case of house property, if there is any loss under the head house property, if there is any loss under the head house property, inter-head adjustment is not allowed, carry forward is not allowed. Inter-head adjustment not allowed, carry forward not allowed. Listen here. In house property, there are two types, correct? SOP, then LOP and DLOP. Let out property, deemed to be let out property. In self-occupied property, section 24B, interest is not allowed as deduction. Hence, there will be no loss, because the loss comes because of the interest only. Hence, in new tax regime, you cannot have loss for self-occupied property. Now, what about let out and deemed to be let out property? Here, interest under 24B is allowed as deduction, correct? So, because of this, can you have a loss? Answer is yes. But this loss you can only set off in the same year with income from house property of other house properties. Okay, you cannot do inter-head adjustment. So if you want to set off this loss against PGBP income, it is not possible under new tax regime. In old tax regime you can do it, but in new tax regime it is not allowed. Moreover, if you are not able to set off, you cannot carry forward also. Carry forward also not allowed. So be very careful. In case of house property, if it is a self-occupied property, interest on loan not allowed as deduction. But for LOP and DLOP, interest on loan is allowed as deduction. But in case of loss, in case of DLOP or LOP, the loss cannot be set off with any other head of income, and that loss also cannot be carried forward to the next year. So house property only that much. Now let's come to PGBP. In PGBP, let's talk about depreciation. Depreciation, earlier there was one line in my book. If this line is still there when you downloaded the book, please cut it off. It is not applicable. Let's talk about additional depreciation. Additional depreciation is not allowed under the new tax regime. Okay. So if there is any additional depreciation, you will be allowing it only in the old tax. It is not allowed in the new tax. Moreover, if there is any carry forward depreciation loss, and if that carry forward depreciation loss contains additional depreciation, that additional depreciation cannot be carry forward. Okay, listen very carefully. Additional depreciation is not allowed. Also, if there is any brought forward loss, so from the previous year, let's say from previous year 23-24, you have brought forward loss of depreciation. Let's say the total depreciation loss is 2 lakhs. Okay, out of this 2 lakhs, 1,50,000 is the normal depreciation and 50,000 rupees is the additional depreciation. Out of this 2 lakh depreciation loss which is brought forward, 1,50,000 is normal depreciation, 50,000 is additional depreciation. This 50,000 additional depreciation you cannot set off. It will lapse. But sir, we had already used this additional depreciation to reduce the value of fixed asset earlier, correct? Now what you have to do, you add back this 50,000. Add back this 50,000 to the WDV of the depreciable asset where you had reduced earlier. You add it back. Since it is not allowed, you add back to the asset. Fine. Next, in PGBP, even scientific research is not allowed as deduction. But remember one point, it is only contribution. In-house research is allowed as deduction. Contribution not allowed as deduction. In-house research fully allowed as deduction. Okay. Then 35 AD, specified business, hotel business, hospital business, all those business, the capital expenditure deduction, it is not allowed in the new tax regime. Okay. Then section 10 AA, special economic zone, not allowed in the new tax regime. Then let's come to income from other sources. In income from other sources, daily allowance and constituency allowance of MP and MLA is not allowed as exemption. No exemption allowed. But there is one extra benefit given under income from other sources. What is that extra benefit? In case of family pension, the maximum deduction is how much? 15,000. But now in new tax regime alone, it has been increased to 25,000. Maximum deduction is 15,000. In new tax regime, it is how much? 25,000. Okay. So here also one benefit is given in the new tax regime. Now let's talk about clubbing of income. In case of clubbing, the exemption given to the parent, okay, that is 1,500, it is not allowed in the new tax regime. Next, let us talk about deductions. Kanna, deduction only major hit to the assessee, because no deduction other than 80CCD2, 80CCH2 and 80JJAA not allowed as deduction. See here, no deduction is allowed, but only 3 deductions are allowed. From 80C to 80U, all the deductions are not allowed except 3. What are the 3? 80CCD2 is allowed as deduction, 80CCH, which is Agnivir, allowed as deduction, and 80JJAA, that is for new employees, it is allowed as deduction. Moreover, in 80CCD2, they have given an extra benefit, that is employer contribution to national pension scheme. What is the extra benefit? The limit has been increased to 14% instead of 10%. So in case of old scheme, it is 10%, but in case of new scheme, it is 14%. So here you can see 3 points where extra benefit is given in the default tax regime. Okay. I hope you are very, very clear. Different chapters I am trying to summarize in one video itself, so that together you will be able to learn the entire concept. Okay. So set off and carry forward, we have already covered. Fine. Now let's talk about the option to opt for old tax or new tax. So listen very, very carefully. We are talking about 2 types of assessees. Assessee who is not having PGBP income, assessee who is having PGBP income or income under the head PGBP. If the assessee is not having any income under the head PGBP, such assessee will have the option to choose the old tax regime or new tax regime every year. Will be having the option to choose old tax regime or new tax regime every year. Sir, what if the assessee is not choosing anything? If he is not exercising the option, then automatically which scheme will apply? Default tax regime will apply. I already told you, if the assessee is not choosing anything, what will apply? Default tax regime will apply. But if the assessee wants, he can choose the option to opt out. Opt out and choose the old tax regime. And this option should be chosen on or before the due date to file the return of income under section 139 subsection 1. Okay, so if the assessee wants to opt out of the default tax regime and want to select the old tax regime, then this option has to be selected on or before the due date to file the return of income. Sir, what if the due date is over? If the due date is over, the assessee cannot choose the old tax regime. Compulsorily, he has to choose the new tax regime only. That is default tax regime. Okay. Now let's talk about the assessee who is having PGBP income. Assessee who is having PGBP income. Here also, the assessee will get an option to choose old tax or new tax. However, if the assessee has already chosen old tax and he is having PGBP, then he has to continue with the old tax. He cannot come back to new tax. He has to continue with the old tax. He cannot come back to new tax. However, if one time he comes back to new tax. However, if one time he comes back to new tax, he can never choose old tax again. He He can never choose old tax again. Listen very, very carefully. If an assessee is having PGBP income from profits and gains of business or profession, then the assessee, the default tax regime will apply year on year. Okay, so every year new tax regime he will be choosing. However, he has option to go to the old tax regime one time. If he goes to the old tax regime, he has to keep on filing thereafter in old tax regime only. But if he decides that now I don't want old tax, I want to come back to new tax, then he can come back once, but after that he can never go back to old tax. You listen? You get my point? Okay. Now read here, you will be able to understand. If the assessee is having income under the head PGBP, the option to shift out of section 115 BAC, if exercised once, cannot be withdrawn. Once exercised, it shall be applicable for all subsequent assessment years. However, if the option is once withdrawn, the assessee shall never be able to exercise this option to shift out again, except where the assessee ceased to have income under the head PGBP. Fine? So till the assessee is having PGBP income, he has to continue. Sir, what if he was having PGBP earlier, but later on his PGBP income itself is not there? Then he can come to this mode. He can choose every year. Okay. So if the assessee is not having PGBP, they can choose every year. But if they are having PGBP, default tax regime is the tax regime. However, once they can go to old tax. If they are going to old tax, they have to continue in the old tax. If they want to switch back to the new tax, they can do it one time, but after that they can never go back to old tax. If still you are not able to understand, skip back 15 seconds and watch what I said one more time till you understand the concept. Okay. Now let's talk about new tax regime for companies and cooperative society. For company and cooperative society. So for this is not that important for your examination. So if you know the tax rates, that is enough. Okay. So for companies, the new tax regime is given under 115BAA and 115BAB. If the domestic company is not a new manufacturing company, then if they opt for the new tax regime, then the tax rate is 22%, surcharge is 10%, and health and education says 4%. So all combined together, the tax rate will effectively be how much? 25.168%. Now, if the company is a new domestic manufacturing company, then they can opt for section 115BAB. In 115BAB, the tax is only 15%, surcharge is 10%, and health and education cess is 4%. Hence, the effective tax rate will come to 17.16%. Similarly, in case of cooperative society, generally they can opt for concessional tax rate under section 115BAD, which is 22% plus 10% plus 4%, which is 25.168%. However, if it is a resident cooperative society which has started manufacturing, they can opt for section 115BAE, where the tax rate is 15% only plus 10% surcharge plus 4% health and education cess. So totally it will come to 17.16%. Okay. Sir, in these sections, is there any limit for surcharge? Answer is no. Even if you earn 100 rupees, the surcharge will be applicable in income of 100 rupees also. Okay. In case of these new sections. Not that important, but you have to know the tax rates. Okay. Now let us come to special tax rates. Now let's come to special tax rates. So special tax rates are the tax rates which are given in specific sections of the Income Tax Act for some special types of income. So first special tax rate that we learnt is section 115BBE. On what income is it applicable? It is applicable on undisclosed sources of income under section 68, 69, 69A, 69B, 69C or 69D, which we had learnt in basic concepts chapter. So on all those undisclosed sources of income, the tax rate will be 60% plus 25% surcharge plus 4% health and education cess as usual. Okay. Now let's come to PGBP chapter. There we learnt the concept of alternate minimum tax. So what is the AMT rate? The AMT rate is 18.5%. However, for cooperative society, the AMT rate will be 15%, and for IFSC unit, International Financial Service Center unit, the AMT rate will be 9%. Okay. Now let's talk about capital gain chapter. This is only very important. We learnt section 111A. 111A is what short term capital gain on transfer of equity shares, units of equity oriented fund, and units of business trust on which STT has been paid on transfer. In such case, if the transfer took place before 23/7/2024, then the tax rate is 15%. But if the transfer took place on or after 23/7/2024, then the tax rate is 20%. Okay, very important. Next, section 112A. Similarly, in case of long-term capital gain on transfer of equity shares in a company, unit of equity oriented fund, unit of business trust on whom STT has been paid on transfer, and in case of equity shares, STT has to be paid on acquisition also, that you remember. Then what is the tax rate? The tax rate is, if the transfer took place before 23/7/2024, it is 10% exceeding 1,25,000, and if the transfer took place on or after 23/7/2024, then the tax rate is 12.5% exceeding 1,25,000. So listen very carefully. The 1 lakh limit is not there at all. It is not there before 23/7 also. On the entire year, the limit is how much? 1,25,000. If the income crosses 1,25,000, then the tax will be 10% or 12.5% as the case may be. Now let's talk about other long-term capital gain. Other long-term capital gains are covered under section 112, where the tax rate earlier it was how much? 20% with indexation. So if the transfer took place before 23/7/2024, then the tax rate is 20% with indexation. But if the transfer took place on or after 23/7/2024, then the tax rate is how much? 12.5% without indexation. So before 20% with indexation, afterwards 12.5% without indexation. Fine. There is also a benefit which is given if an individual transfers land or building. Their indexation benefit is available even later on, which I have discussed in the amendment lecture, which is relating to capital gains. So do watch that amendment lecture also, so that you get clarity in the concept. And also, short term long term concept has changed for your examinations. Earlier there was 3-year concept in long term capital asset, but now there is no 3-year concept. So that also you make sure that your concept is clear from the amendment lecture. Okay. Now, in income from other sources, there is a section called 115BB where winnings are taxed. So, winnings from lottery, crossword puzzle, horse race, card games, or any other games of any sort, and also gambling or betting. The tax rate is how much? 30%. Okay. Then there is 115BBJ for online games. Okay. Dream 11, My 11 Circle, Rummy Circle, etc. On such online games, the tax is how much? 30% on the entire winnings. Then in now I want you to note one point, that in case of 115BB, 115BBJ and 115BBE, no expense is allowed against the income, no deduction is allowed under chapter 6A, no loss is allowed to be set off against such income, and also no basic exemption limit is allowed for these incomes. Fine. Now let's talk about capital gain. Capital gain. In capital gain, there is a change or amendment in the buyback provision. Earlier, you used to study the concept of buyback tax. If the domestic company is doing a buyback, it will pay a buyback tax to the government. What will be the buyback tax? The buyback tax is the tax of 20% plus 12% surcharge plus 4% health and education cess. It will be applicable on buyback price minus issue price. So buyback price minus issue price, you will get the total amount. On this amount, that rate will be applicable. However, from 1/10/2024, I think here it is not given. So please write here. From 1/10/2024, what will happen? The concept of buyback tax has been removed, Kanna. Hence, when the domestic company is doing a buyback and when it is giving the money to the shareholders, it need not pay any tax. And in the hands of shareholders, such amount will be treated as deemed dividend. It will be treated as deemed dividend and it will be taxed under income from other sources. Then there is also a concept of capital gains that I want you to watch the amendment lecture. You will be able to understand fully. Okay. Next point is not that important. Now let us come to surcharge. Last concept in this video, surcharge in case of special incomes. Listen Kanna, when it comes to 4 types of income, what are the 4 types of income? 111A, 112, 112A and dividend income. 111A, 112, 112A and dividend income. On such incomes, the maximum surcharge which can be levied is only how much? 15%. Maximum surcharge is 15%. On dividend, 111A, 112 and 112A, maximum surcharge is how much? 15%. Now, let us see for both tax regimes how to calculate that surcharge. Firstly, you have to see this table only if the income is more than 2 crores. So, if the income is not more than 2 crores, you need not worry at all. As usual, how you were calculating, please calculate in the same manner. Now, if the income is more than 2 crores, then on 111A, 112, 112A and dividend, how much is the surcharge? The surcharge will always be 15%. The surcharge will always be 15% if the income is more than 2 crores. But now you have to see what is the income other than these incomes. The income other than these incomes. If the income other than these incomes is up to 2 crores, then surcharge on such income will be 15%. If the income other than these incomes is more than 2 crores, then on dividend 112, 111A, 111A and 112A, it will be 15% and on the other income it will be 25%. Okay. Now, what about the old tax regime? In the old tax regime also, you see whether the income is greater than 2 crores. If the income is greater than 2 crores, see here, if income other than dividend 111A, 112 and 112A is up to 2 crores, then 15% is the surcharge. If the other income is more than 2 crores up to 5 crores, 25% surcharge on such income and 15% surcharge on these special incomes. If income other than dividend 111A, 112 and 112A is greater than 5 crores, then on the normal income 37% surcharge and on the special incomes 15% surcharge. So now for being more clear, I have also given you a question in my notes, okay, and the answer is given here. I'll just explain you answer in brief, then I want you to pause the video and wherever possible please make note of the answer so you can refer while you are studying for your examination. Okay, now listen very carefully. First don't write, please listen. When it comes to 111A, 112 and 112A, finding out the surcharge is very simple Kanna, because on 111A, 112 and 112A you will charge a special tax rate. So tax is calculated separately. On that separate tax you are going to calculate the surcharge. Correct? Very simple. Hence you can calculate the 15% surcharge on such types of income. But when it comes to dividend income is charged under the normal tax rates. Hence, how to find out what is the surcharge on dividend income separately, what is the surcharge on other than dividend income separately, that we are going to see. Now, in this question, see here. Long-term capital gain under 112A is 3 lakhs. Short-term capital gain under 111A is 5 lakhs. Dividend is 15 lakhs and other income is how much? 3 crores. Other income is 3 crores and we are assuming that the transfer took place before 23/7/2024. So old rates will apply. Okay. First let us see 112A, which is very simple. Limit is how much? 1,25,000. Total income is how much? 3 lakhs. So balance how much? 1.75 lakhs. On 1.75 lakhs, 10% tax is 17,500. Maximum surcharge is how much? 15%. Hence the surcharge is 2625. Now let's come to 111A. 111A, how much is the tax? 15%. hence 75,000 will be the tax. Surcharge will be 15% of 75,000, so 11250. Now let's come to other income. Other income is 3 crores, dividend income is 15 lakhs. Both are taxed together since it is a normal tax rate, correct? So 3 crore 15 lakhs. Now first you have to find out the tax of 3 crore 15 lakhs. After going through the slab rates, the tax will come to 92 lakh 62,500. How much? 92 lakh 62,500. Now out of this 92 lakh 62,500, you have to split the tax into two parts, the tax on dividend and the tax on other than dividend. How to split it? See here, tax on dividend is equal to tax on the normal income, that is the entire income including dividend, divided by normal income including dividend multiplied by dividend income. If you want, please note it down, but it is a simple proportionate calculation, that's all. Okay, so total tax divided by total income multiplied by dividend income, you will get the dividend tax. So this dividend tax is coming as 4,41,071. On this you have to calculate surcharge at 15%, and balancing amount is how much? 88,21,429. On this you have to calculate 25% surcharge. Why 25%, sir? See here, see in this table, the income is more than 2 crores, correct? Then other than dividend 111A, 112A and 112 income is more than 2 crores but up to 5 crores. Hence on the normal income the surcharge is 25%. Okay, so see here, it is 3 crores. Hence the surcharge is 25%. So 25%. So you will get the total surcharge amount 22,71,518. If you add all the incomes and taxes and surcharges together, you will get this amount. On this, finally you will have to add the 4% health and education cess, and at the end you have to round off the total tax to the nearest multiple of 10. Okay, so understand the concept. You please pause the video and watch the see how the tax is calculated. Fine. So with this, finally we have taken more than 1 hour, but we have thoroughly seen the normal tax rates as per 115 BAC and the special tax rates. We have learned the amendments. We have learned the amendments in 115 BAC also, where certain extra benefits are given. The new slab rates also we have learned under 115 BAC. So I think this will be a comprehensive video. Along with examples, you will be able to understand the concept. Very, very important video kana from your exam point of view. I know there are only a few days left for your examinations. Some students might be facing underconfidence whether we will be able to complete our preparation or not, whether we will be able to write the exams properly or not. But don't worry at all. These last few days, give it your 100%. Okay, don't worry about the results at all. You give your 100%, be tension free, stress free, and go and write your exams and come. Definitely you are going to get good results. Okay, I wish you all the best of luck. See you in the next video, Kanna. Till then, take care. Bye bye.